Hi everyone, welcome back to my channel. If you're enjoying these videos and would like to keep learning how I stay consistently profitable as a trader, please give this video a like and subscribe to the channel. And if you want to get notified whenever I post a new video, don't forget to hit the notifications bell. Yesterday, or I should say in my last video, I covered how I prep for the week, and that was mostly focused around technicals, volume price analysis, options flow, Fibonacci, Elliott wave theory, things like that. And while all that stuff is really useful, it's not the entire picture. So I just wanted to make a short video talking about the other piece of the puzzle, which would be fundamentals, and in particular fundamental news events. So you can see here on my browser I have up marketwatch.com, and it's the economy politics calendar, and you can see in front of me we have last week's calendar, and there were some decent news events. I mean, some of this stuff definitely impacted the market, created some volatility, especially whenever you have Jerome Powell speaking. I mean, he's the head of the Fed. It's a pretty much guarantee that the market's going to be impacted, and we did see some movement on Tuesday around that time. It always creates volatility when he's speaking, and I'll get into more of that shortly. And then also there were jobless claims last Thursday. And based on how these numbers look, I mean, jobless claims usually doesn't impact SPY, QQQ, ES, NQ as much as other news will, that I'll touch on shortly, but I have seen it impact things before, so it's something to be aware of. More importantly, it drives futures more than anything, since this happens at 8:30 a.m. before the markets actually open. Now, getting into this week, though, this is where things are going to get really interesting, and there's certainly going to be volatility. So on Tuesday, they're talking about new home sales, some other information related to the S&P Global U.S. Services, PMI flash, and then most importantly, the one I want to call out specifically is FOMC minutes, which is always big. I mean, FOMC minutes, that's where they talk about how inflation's going, what they're doing to combat inflation, BPS raises, things like that, and it has significant impacts on the market. The last FOMC minutes, it was to me, it sounded like terrible news. I was discussing it with a trading buddy, and we're both like, this is really bad news. And you never want to assume, though, how the market's going to react. And sure enough, the market just absolutely took off. It jumped. I was probably like a dozen points from 2 p.m. or it was around 2:30 p.m. all the way to close, and we were just shocked. And I usually remain flat for these events, at least until Jerome Powell is done speaking, because literally it's almost like you're watching, I don't know if anyone's ever seen the Simpsons episode where the newscasters is talking about stocks and price starts jumping all over the place. He says something bad and it shoots down. He says something good and it shoots up. And it's like that. I mean, it's basically a cartoon. And you can play those with naked calls and puts, but in my opinion, it's gambling, and you just need to be aware of what you're doing if you decide to play those. However, when he's done talking and you see the market pick a direction, that's when it's actually safer to play it. So FOMC minutes, and then the other big one to always look out for is CPI data, or anything discussing inflation is another big one that I look for. So with those events coming up, I just wanted to point that out. I didn't call that out in my last video, and I kind of felt like I was doing everyone a disservice because I just focused on technicals. So I wanted to take a second to point that stuff out. Some ideas for playing these events, if you did want to play during, or you want to put in a play beforehand. One thing you can do with options is you can do a long straddle or strangle, and basically that's where you would buy an out of the money call and an out of money put at the same time. And the idea is that if you get a big enough move in one direction, even though you're losing on one side of the play, that big move in the other direction will cancel out your loss on the other side of the play, and it's perfect. It's great for big volatile plays. So that's just one idea for playing these. I mean, there's a lot of different things you can do, but really you don't want to do things like credit spreads, anything like that. That would get you killed. Back when I was a newbie trader, I actually was making a lot of money. This is when the markets were more stable, and I was making a lot of money doing put credit spreads week after week. I had no idea what FOMC minutes was or what it meant for the market. I kept doing play after play, things were great. All of a sudden, FOMC minutes hit, and I just get wiped out that week, and I had no idea why. And sure enough, the market bounced back. This was back when we can actually pull up a chart here, but this was back when this was like during the COVID recovery period in 2020, where the market would consistently just move higher and higher and higher. You could see here, and then we'd get these dips where they would pull back. And if you look at the dates on these, this always consistently, since the COVID lows, these little tiny dips always lined up with FOMC minutes, and I wasn't prepared for that at that time, and it hurt my account. Now, once I learned about it, it was a tough lesson to learn, but once I learned about it, I was able to play things differently, and the market kind of had us trained at that point that during FOMC minutes we would get a dip, it would pull down to the 20 or 50 SMA, and then it would bounce right back up. So it made things easy, because you can see here, you would just basically buy once it touched the 50 and started pulling back up, you would buy calls and then off to the races, and you could hold those for a few days. Things are quite different now. I mean, you could see how often that worked too on FOMC minutes weeks. Now, when we have FOMC minutes, we get moves like this. This right here is the rally I was referring to, where we had this big run up, and then immediately the next day it opened and just tanked. And so any plays you do decide to take have to be centered around capitalizing on volatility. Anyway, wanted to call that out for next week. Again, looking at the technicals that I covered in my last video combined with upcoming market news, major news events go hand in hand, and those are the main things I look for going into the week. I appreciate you watching. I'm going to try to do another video either tomorrow morning, Tuesday morning, sometime very soon, about how I prep for the day, because what I've been covering these past two videos is weekly preparation, and I want to get right into talking about daily preparation as well. So again, thanks for watching. I appreciate all the feedback everyone's giving me. It has been incredible. I never expected this much good feedback so quickly, and I will certainly be back soon. Thanks again.